Hi guys, welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. It's a brand new week and lots of news to digest. We have the Apple's Wanderlust event this week as well. And a lot of economic data as well poised to come out later this week. But, over the next 30 minutes, we'll be talking about the cues for trade, all the stocks in focus this morning. And of course, we'll also be getting all your stock-related queries answered by our technical expert on the show. So if you have any queries, send them in to us on our YouTube feed as usual, and we will try and take them up. But before we go any further, let's take a look at the top headlines at this hour. G20 leaders adopt the New Delhi Declaration with complete consensus. Joint statement warns against the threat of using nuclear weapons, even as it fails to condemn Russia's aggression against Ukraine. India also hands over the G20 presidency to Brazil. President Lula says that the Brazilian presidency will focus on accelerating the fight against global hunger and climate finance. India announces the first of its kind infrastructure and connectivity pact with West Asia and Europe at the G20 summit. Says the soon-to-be launched India-Middle East-Europe Economic Corridor aims for stronger trade ties and energy flow from the Gulf to Europe via railways and ports linked to India. In a clean energy push, the G20 also announces a Global Biofuels Alliance with India, the US and the Brazil as founding members. Wall Street ended in the positive zone on Friday, but for the week, stocks ended lower as stronger than expected macro data reignited fears of rate hikes by the Federal Reserve. Asia, meanwhile, opens mixed ahead of key macro data from India and China. Later in the week, the GIFT Nifty signals a higher start for the Indian market. Oil holds above the $90 a barrel mark even as prices cool off slightly from 9-month highs. Expectations of tighter supply after Saudi Arabia and Russia extend production cuts keeps prices elevated. Also on the show, we put the spotlight on what to do with L&T after the stock hit record highs. How is Reliance looking on the charts after it announced a mega AI partnership with Nvidia? And is there a renewed rally in banking shares? We put the spotlight on all these shares later in the show. Well, without any delay, let's now bring on board Vivek Mashrani, who's the founder of TechnoFunda, to talk about the markets and several stocks that are in focus. Good morning, Vivek. Great to have you on the show. First of all, we've seen the markets once again pick up steam. We are inching towards record highs once again, and the FII sell-off, in fact, FII flows have, become a little more tempered, but DII flows have given support to the markets. Where do you expect the markets to head from here, given the fact that, we are, of course, knocking at lifetime highs?
Yeah, good morning and thank you so much for having me on the show. I think if we talk about the broader market, Nifty had a bit of cool off in between, but I think it's forming a very nice base and we will test 20,000 soon. And given the euphoria G20 meet and a lot of positive news happening globally, I think hopefully we should breach that 20,000 mark. And as soon as that happens, I think a lot of FOMO euphoria will build in and a lot of people who were on the sidelines might also jump in. So that we are already seeing in the mutual fund inflows, we are already seeing in the new demat accounts that are getting opened. But I think that is only going to accelerate if we, breach that mark, very, very sensitive 20,000 K mark. And in terms of mid-cap and small-cap, what a stupendous rally it has been. I think it is a very, very strong trend on mid-cap and small-cap side. So far, I'm not seeing any respite. It is very, very good momentum going on there. And not only just momentum in terms of price, but we are seeing a lot of earnings which are coming up in these mid-cap and small-cap companies in a very, very positive note. So I think so far, all good. Let's wait and watch and see how it unfolds further.
All right, so far so good. But since you were mentioning the mid-cap end of the markets doing extremely well, we've seen railway stocks as well as shipbuilding stocks, on a tear over the last few sessions. In fact, over the weekend, we also had, news flow from G20, wherein a project has been announced to link India to Middle East and Europe via rail as well as waterways. We saw a very healthy rally coming in on Friday as well, in the railway stocks, given the fact that there were already reports suggesting that such a deal will be inked later over the weekend. But among the railways and shipbuilding pack, any stocks that you are particularly liking at this juncture?
See, I think I've been bullish on this sector since last year. For people who want to see a deep dive into both these sectors, I've done video on my YouTube channel also like 1 year back, right? So basically, the focus of government has definitely shifted on the capex and upgradation of the defense side and railway side, and we are seeing on the ground also a lot of Vande Bharat trains and a lot of new initiatives have been taken on the railway front. And same way on the defense, the clear focus is on Atmanirbhar Bharat, where we want to produce all the goods of defense side at our location, and we don't want to be too much dependent on foreign countries. Slowly it is happening. Of course, it's a big shift and it's going to take time to fully be Atmanirbhar in that true sense. But the directionally what intent government has shown is definitely we want to go in that direction. They've also boosted some of these companies with multiple orders where they are giving orders to the domestic company rather than foreign company. So I think the trend is going to be there. And if you have observed recently, what the pivot has also been in the defense sector is on the export side. So not only we are producing things which are domestically needed, but we are also focusing on things which are which can be exported. And even if you see the orders, how it is panning out, we saw Cochin Shipyard, they got orders from Norway and we did inroads into those countries. We recently saw Mazdok getting a very big order from US Navy in terms of repair and maintenance contract. So I think the direction in which these sectors are going, I think still a long way to go. Of course, you might see some intermittent corrections, some kind of valuation euphoria, some kind of hiccups in terms of execution of order book. If we even see Cochin Shipyard, recently they said that, they are facing some difficulty in getting certain components which weren't made in India, and they were facing execution challenges, although they are having 22,000 kind of crore order book. So very bullish on both these sectors overall. And on the technical side, if we see Cochin Shipyard, Mazdok, both have formed new all-time highs. They have shown very good price volume action in last 2-3 days also. And same goes with railway stocks. And best way to play these sectors, I believe, is through basket approach, right? You create a basket of 4 to 5 companies in each sector, maybe defense and railways. And whichever company is performing, executing, and going up, you keep adding those companies in your basket and trim other companies which are losers in your basket. That is how I think we should be playing these sectors rather than betting on 1 or 2 single companies in the sector.
All right, that was about the railway as well as shipbuilding pocket. But let's also talk about an L&T. This stock, of course, hit fresh record highs. In fact, there are reports that it may be winning somewhere close to winning, or it may have won a 24,000 crore rupee order from Saudi Aramco. Now, this order will take L&T's order book, guidance that it had given at somewhere around 15% to over 20% for FY24. Would you say that the stock has already re-rated, or is there, more room for it to re-rate going forward, and how should one approach this stock now?
Yeah, so if you see the historically how L&T has moved, it had a lot of order books from domestic side of the things, but usually what they used to get from the Saudi countries were lacking and it was lackluster. Because of that, stock was not performing for a while, and there was a lot of consolidation also in between, and they also piled up a bit of debt and their interest cost burden also went up. Now, if you see with Aramco, if they are getting like around 32,000 crore kind of orders, which they are saying like around $3.9 billion, that will completely change the trajectory. And what happens when these kind of orders get executed, the debt comes down, the interest cost comes down, the operating leverage kicks in. And that is where, all your 4 cylinders, your sales growth, your operating leverage, your margin expansion, and your debt reduction, all these 4 cylinders fires and the earnings actually exponentially grows. So I feel, whatever re-rating has happened so far is partially re-rated, because market generally waits for execution. And then once the earnings starts coming in, once the execution is on the cards, there will be further re-rating, or at least the earnings growth will boost up the further run from here. So I think still steam left, of course, in the intermittent phase where market will wait for execution. There might be a bit of consolidation, there might be a bit of profit booking, but directionally I feel it's a very positive note for L&T as well. And even charts technically, if we see, it is forming a nice base formation. Last 2 days it has given a very nice price volume breakout. Last price was with a gap up, so very positive note. And overall I think it is forming new high as well for this particular company as well. So yeah, really again bullish on this counter as well.
All
on a
right.
longer term basis.
Right, that's the view then. But let me also get in your thoughts on the cement pack. Last week there was a note by Jeffries which had noted that there was a cement price hike, in the east as well as the west. But, given the fact that there has been strong demand when it comes to cement players, would you expect another round of price hike coming in later this month? And how do these stocks look now, an Ultratech, Ambuja, India Cements and the likes?
Yeah, so basically, I also had my analyst of the team do some ground level checks, channel checks in cement sector. And overall, the view is because of a lot of capex that is happening on the infra side, both private and public, we are going to see demand on the all the home building side of the things, right, and including cement. And I feel that the price hike can still further happen. But having said that, a lot of these cement companies have already run up a bit. We need to be probably cautious in terms of valuations. But if you see fundamentally, because it's an election year and also there are a lot of new projects and capex coming on the both the sides of the things, I feel the demand is not going anywhere. The only thing to worry about is how you basically play the companies in this sector.
All right, that's the view on the cement pack. With that, Vivek, we're running out of time. Thanks a lot for taking out time and joining in this morning and sharing your thoughts with us. Look forward to touching base with you soon sometime again.
Thank you so much. Thank you so much.
Well, with that, let me also bring on board my technical guest for today. Joining me is Rajesh Palviya of Axis Securities. Good morning, Rajesh. Great to have you on the show as always. 50-point up move suggested by GIFT Nifty this morning. Would you say that we are poised to clock that 19,900 mark in today's session and maybe 20,000 by midweek?
Morning, Nandita. Yeah, definitely. The kind of momentum which we have witnessed in the previous week is clearly indicating that, yes, this Nifty is now heading towards 20,000 mark, and possibly in the current week itself, we are going to have that kind of level in the Nifty. Both indices have witnessed a long built-up kind of session in the previous week, and most of the large cap stocks are now started participating in this rally. Banking stocks are doing well. Overall, Bank Nifty both are in bullish territory for the near term as well as on the short term basis. Put writers are now shifting their position on the higher side. So base is now shifting higher. Most of the call writers have covered their position for 19,700, 19,800 strike. It clearly shows that, now this rally can extend further higher, and we are expecting that, yes, possibly in the current week itself, we may see a level of 20,000 for the Nifty. And then this rally can extend further also, as the broader market is showing quite well, like, buying interest is continuously there on the mid cap, small cap, as well as in the large cap space. Yes, we expect this rally can extend to 20,000. One should keep their stop loss at around 19,700 to hold their long position. For Bank Nifty, one can keep a stop loss of 45,000 to hold their long position, and possibly 45,800 is the immediate target where we are seeing for the Bank Nifty also.
Right. Without any delay, let's talk about the stock of the day. Reliance Industries, given the fact that, there has been a partnership announcement, with Nvidia to advance AI in India and for India. Remember, Mukesh Ambani had highlighted during the AGM as well, the push towards artificial intelligence as well. And in fact, Nvidia has also tied up with Tata Group. So on the charts, Reliance Industries and, TCS as well as Tata Communications, these three stocks, how should one trade into these counters now?
So in the previous session, Reliance Industries started recovering after consolidation of almost 7-8 days, and now stock is very well holding about 2400, 2420 level, which is the breakout level on the near-term chart. Even on the derivative front also, we have seen, most of the call writers have covered their position for 2400 strike, 2420. All these strike have shown, short covering in the call writing position. So which clearly indicates that, yes, Reliance Industry can extend its gain towards 2,500, which is almost near to its 50-day moving average. So we expect this rally can extend towards 2,500. If at all stock crosses about 2,500, then another round of short covering we can see in the stock prices, and then possibly Reliance can head further higher towards 2,540 also. So those who are already bought or want to buy in the opening, They can keep now stop loss at around 2400 for upside target of 2500 to 2540. Tata Communication is also in uptrend. Looking at the overall setup, we expect that this stock will continue furthermore upside from the current level. If we analyze the weekly setup, also stock is traveling in the upsloping channel. So looking at the overall setup, we believe that Tata Communication can continue furthermore upside towards 1950 to 2000 level also. So buy on dips is the strategy in the Tata Communication. Keep accumulating the stock as the stock is bullish across all time frame. Your stop loss should be at around 1820.
All right, that's the view on the stocks that I mentioned, Reliance Industries, Tata Com, TCS as well. But let's talk about the hot brokerage call of the day now. There has been a note by Equirus on Zomato. It has initiated a long call on this stock, target price at 135 rupees per share. It believes that the stock is a solid play on India's rapidly expanding food delivery space. In fact, the industry's profit pool is expected to rise significantly, and quick commerce and other adjacencies provide value creation beyond the core business. And the stock is trading at somewhere around FY27 PE of 37x, and it's an attractive stock given the fact that it's an asset-light business, and the solid free cash flow generation also bodes well for the stock. Looking at the stock, it is knocking at that 100 rupee mark once again. 135 is the target that Equirus has pegged on Zomato. But would you expect levels of 110 to 120 in the short term?
Yeah, definitely. So after a brief consolidation, now again stock has picked up, and since last 3 weeks we are seeing higher high-low formation for the stocks, which clearly shows that there is a sustained buying action is taking place for the Zomato. Yes, we expect 110 is the immediate target on the near-term setup. So one can buy and accumulate this stock with stop loss of 92. 110 is the immediate target, but yes, possibly this stock can continue furthermore upside also on the positional basis. 120, 140 could be the next target on the stock for next coming months.
All right, that's the view on Zomato. Then let's take up some viewer queries that are trickling in this morning. The first one comes in from Prabhu. Wants to know your thoughts on GNFC. I'm sorry. So the chemical stocks were dormant for quite some time, but GNFC over the last 1 month has given a return of somewhere around 19% or thereabouts. How should one trade into some of these fertilizer stocks now, Rajesh?
So most of the fertilizer agrochem stocks are showing good traction. If you analyze the GNFC, this is the third week where stock is in uptrend, and stock now managed to surpass its previous swing high also. So dip, what we have witnessed during the course of its earnings, now most of the damage is already recovered, and now stock is showing strength on the near term as well as on the short term chart. In this recovery, stock managed to cross all its long-term, short-term moving averages. Yes, we expect that GNFC can continue furthermore upside towards 680, 690 zone. Also, one can buy and hold this stock with stop loss of 615. We do expect another the fertilizer sector as a whole can continue furthermore upside, as most of the stocks manage to give breakout on their near-term setup. RCF is also looking very promising. The kind of breakout which we are seeing on the weekly chart is clearly showing that this stock can be a good stock for holding on a positional basis, and possibly stock can move further higher towards 150, 160 zone also. So RCF one can hold for upside target of 150. Chambal fertilizer is also showing good traction from its oversold trajectory. Looking at the near-term, short-term setup, we expect that this stock can also rally towards 300 zone. So those who have already holding this Chambal fertilizer or want to buy can keep stop loss of 274 for upside target of 300.
Right, that's the view on the fertilizer and chemicals pack. Hope that answers your query. But let me also take up a query on the sugar pack. Mohit Anand Bhatia wants to know whether it's a good time to buy into Sri Renuka Sugar. Now, sugar stocks have seen a very strong up move, sweet gains coming in given the fact that sugar prices are at a 6-year high. But would you say Sri Renuka, of course, was under pressure on Friday. But would you advise investors to look at dips to buy into these stocks now?
So sugar as a sector is looking very promising, and the kind of announcement which we have seen in G20 for global biofuel setup, so that will also boost the demand from the ethanol, and these sugar stocks may also contribute to this ethanol story. So we believe that yes, Renuka, Praj Industry, Triveni Engineering, all these stocks are looking very promising, and we believe that sugar space is a very attractive, looking at very attractive on the near term as well as on the short term setup. And we expect most of the sugar stocks may continue furthermore upside in the continuation of this uptrend. Renuka sugar is looking promising. 60-65 is the next target for the stock. One can buy and hold this stock with stop loss of 47. Raj Industry, the proxy play to the sugar, is also looking very promising. The kind of run-up we have seen in the last few months is clearly indicating that this stock can also continue furthermore upside towards 570, 580 zone. Triveni Engineering is also looking very promising from this space. So one can buy and hold at Triveni also. Very strong breakout on the weekly chart. We expect the target of 370, 380 for Triveni Engineering. Keep your stop loss at around 325.
All right, that's the view on the sugar pack. Hope that answers your query. But moving on, let's take up a query on NTPC. Siddharth Jain wants to know your thoughts on this stock. Of course, perched at 52-week highs, stock has seen good traction over the last 6 months. It has given returns of 33%, and power demand, of course, has been on a high. It is expected to pick up further. Breakout stock now, NTPC, Rajesh?
Yeah, very strong breakout on the daily, weekly, monthly time frame, and the stock is clearly in the uptrend. And looking at the overall structure, we expect that this stock can exhibit furthermore bullishness. 255, 260 is the next target for the stock. You can hold your position with stop loss of 234. Even on the power space, Tata Power can be looked at. This stock is also looking very promising. And we expect that Tata Power can also continue furthermore upside toward 285 to 290. So most of the power stocks are looking very attractive. Buying interest is there, sustained buying interest is happening in the most of the power stocks. So hold your position for furthermore upside.
All right, hold is the call then on some of these power stocks. But let's take up a query on SBI then. Sapna Singh wants to know your thoughts on this stock. PSU banks have been doing fairly well. It's the private sector banks that have just about started participating. So, vis-a-vis in SBI and other private sector banks, would you advise investors to stick to SBI and, perhaps look at some of the other public sector banks as well?
Yeah, so definitely the bank Nifty is clearly showing that this rally can extend. Private PSU, both bank are looking attractive, and most of the PSU bank have started recovering since last couple of trading session. SBI is now managed to give breakout of its last 4-week consolidation. Looking at the breakout, yes, we do expect that this momentum can extend towards 600 to 615. Keep your stop loss at around 570. From PSU space, we do like Canara Bank also. Stock is holding now about 20-day, 50-day moving average. Already near-term chart is showing strength. So we expect that Canara Bank can also continue furthermore upside towards 355, 360. So one can buy this stock also with stop loss of 332. From small PSU bank, PNB is looking also very promising. Strong buying action is happening in the stock. Stock is in uptrend since last couple of weeks, and looking at the overall setup, we expect that PNB can also scale up to the level of 72, 74 on a positional basis. So your stop loss should be at around 63 to hold PNB on the long side.
All right, that's the view on the PSU banking pack then. But very quickly, I want to squeeze in one last query then. This one is coming in from K. Naga. Wants to know your thoughts on Reddington. He holds shares at 165 rupees a piece. He wants to know whether he should hold or sell. Stock is somewhere at around 165.40. He's making marginal losses. What should he do?
See, some recovery is happening in the stock, but still stock is trading below to its important moving averages like 50, 100, 200. And that is adding some, weakness on the short to medium term setup. If at all stock crosses above 170 mark, then some recovery we can expect towards 185 to 190 zone also. But looking at the near-term setup, some consolidation action can be there in the stock prices. 170 to 175 is the immediate target. If at all stock crosses those levels, then you can see higher prices in the stock in the near term also. But looking at the near-term, short-term setup, we expect some consolidation. Your stop loss now should be at around 155. That is the breakout level of previous swing. So 155 should be your stop loss to hold your long position.
All right, 150. Keep your stop loss at 155 levels. But with that, we have come to the end of this query segment. But before I let you go, Rajesh, any stock recommendations for our viewers this morning?
So we expect, real estate space can show a good uptick in the current week also, and most of the real estate stocks are showing good traction. So overall realty is our preferred pick from the real estate, and we expect that 1230, 1240 is the immediate target. So overall realty one can buy. DLF is also looking promising, but overall realty is looking one notch better than DLF. So overall realty is our preferred pick. 1150 is the stop loss. Chola Finance is also another stock where we are bullish, and we expect this stock can also continue for the more upside. 1250 is the next target. Keep your stop loss at around 1145. The third stock, Reliance Industry, as we have already discussed, and we expect that Reliance Industry can continue for the more upside. So that stock can be looked at on the near-term basis also for 2500, 2540 target.
Those are the stock recommendations coming in from Rajesh this morning. With that, Rajesh, thanks a lot for joining in and sharing your thoughts with us, and of course answering all of your queries. And to our viewers, if we missed out on your query, don't worry, send them in to us tomorrow and we will try and take them up as well. But with that, we are completely timed out on this edition of Morning Trade. Of course, from me and the entire team, thanks a lot for watching. Don't go anywhere, because coming up next is Opening Bell.